Hey guys, Mike Gephardt. Um, I'm presenting this video to present myself and my credentials as an investment analyst in real estate, and to present a property that I've underwritten and I'd like to show you. First, about me, I worked on Wall Street for 25 years, trading fixed income, trading mortgages, trading mortgage derivatives. I know markets, I know interest rates. And one of my big terms that I like to use, and one of the big metrics that I like to use, is return on equity. I use that term very frequently in the real estate markets. That's enough about me. I want to talk about this property here. It's in Lakewood. It's actually a Denver address down in Westwood. It's a 2-unit property. It's a duplex. It's been rehabbed in 2020, as you can see, new kitchens. Both units have new kitchens. It's a 3-bedroom and a 2-bedroom. The taxes are $1,600 here. It's been on the market for 52 days. As far as I can tell, there's been no offers on the property. It hasn't gone under contract. This is the type of property you want to look at if the numbers make sense, because it's sitting there, and you might have a seller now saying, when am I going to get an offer on this property? As you can see, it's a 2 and a 3-bedroom property. Our rents I took from Rentometer. The average rents are 3-bedroom at $2,400. For the 2-bedroom, it's a $1,700 rent. Those are average rents. It will not be hard to get those rents. We are going to look at the pro forma now. This property is offered at $555. You're going to put 35% down with a couple of dollars to improve the property. Maybe you're cleaning carpets, cleaning windows, I don't know, fixing some stuff. And your closing costs, you're going to be out of pocket $204,000. Your rents I just showed you are $4,175. We're going to assume 95% occupancy because you're going to have this property fully rented without a problem. We're assuming a 7.5% mortgage rate. For 30 years, this is what you're borrowing. $360. The property's $555. You're putting $200 down. Your taxes from the listing are $1,600. Your insurance as an assumption is $1,800 or $150 a month. There's no HOA in the property. You're not paying utilities because your tenants are. This number here is a set aside. You're putting 7.2% or points a year or 0.6% a month aside into a separate account to pay for repairs, maintenance, and capital expenditures. This number here is a $100 bullshit fee. I don't know what you're going to spend it on, but we put $100, $200 aside every month for 48 months because you're going to have to spend something, whether it's a water bill or something. You're not paying a lot of utilities, but maybe you'll do that. You're going to have this property professionally managed. That's $455 a month. That's 10% you're paying. If you want to manage the property yourself, this $815 is going to go up to $1,270 because you're saving that $455. But I'm assuming you're going to pay the 10% property management fee. When you do all this, you're going to gross $815 a month. Out of that $815, we're going to subtract $278 for this 0.6% set aside for maintenance and capital expenditures. This number, $815 less $278, gives you $537 cash money a month. Our assumptions are a 5% appreciation rate, 3.5% inflation rate, and rental increase rate of 4%. Those are all well within parameters in the Denver front range. If you do that, here's what your property looks like when you bought it. You're going to buy it at a 6.2% cap. You're going to have a $52,000 first-year tax reduction. Your accountant's going to kiss you on the lips in April. In year 5, assuming you do nothing else, this property is going to generate $1,500 a month in cash flow for you. Your $200,000 that you laid out of pocket is now worth $411,000. You've doubled your money in 5 years. That $411 in equity, you could now maybe buy 2 other properties in year 5. And in year 10, maybe you got 3 or 4 properties doing this for you. In year 10, if you do nothing else, this $200,000 you laid out is worth $750 for a 14% annual return, and you're generating $2,400 in cash flow, positive cash flow a month. Let me ask you, 10 years from now, do you have something set up that's going to look like this? If you don't, we should talk. My name is Mike Gephardt. I look forward to hearing from you. Thank you.